And Elevate 6.4 day 3 is live. Hi, everybody. Welcome to day 3 of Elevate 6.4. That's Elevate 2024. I'm Carrie Ann Stimpson, of course, your host who has been taking you through the last couple of days. And we're very excited to be here for day 3. And guys, if you've been following JMMB over the years, particularly through our Goal Getter live stream series, you know that this night's session is going to be just as good as the previous two. And it's one of our most highly anticipated sessions, right? And before I introduce our guest, a couple of disclaimers. One, he's my husband. Yes, straight up. And we're coming to you from the same house, but I'm upstairs, he's downstairs. So that's one. The second thing is that the reason why he's here is that if you go back to JMMB Group Jamaica's YouTube channel, you would have seen that about 3 years ago, he did an online session with us talking about the things that they don't tell you when buying a property. And he did that session as a follow-up to a previous workshop he would have done for JMMB Notarius a few years before that on a similar topic. And based on the feedback, we brought him on for that online stream. It was during the pandemic when no one had anywhere to go. And that episode, I think, is probably our top 1 or 2 best performing episodes in terms of views because the information was so rich. It was so fantastic. And when we were planning Elevate 6.2 and we were looking at the different topics, we know that property acquisition is a goal that a lot of people have, whether it's your first home, second home, investment, property, piece of land. A lot of folks have this goal. And we said, you know what, let's bring back Stuart because it was an awesome discussion. That was one of our top performing episodes. And we reached out to him. And of course, if he wanted to have a place to live, he said yes, he would come back. So please, folks, please join me in welcoming Stuart Stimpson, attorney at law. What's going on, Stu?
Hi, good evening.
Hey.
Nice to see you again.
Nice to see you again. Long time.
Right.
So folks, so we're going to be talking about the things you need to consider when buying property, okay? And so this is going to be a serious conversation. Stuart is an attorney at law, right? He's been in practice now, as much as he doesn't look it all the while. He's been in practice now for about 20 years. And he's partner at Hart Muirhead Fatta, attorneys at law. So he's a proper lawyer, know him thing, and has been doing this for quite some time. And as your quote-unquote virtual attorney, today through this recording, then you're going to get all the nuggets you need for those of you who are looking to purchase property of any kind. And you don't want to miss it. So guys, you know the drill. If you know somebody who is friend, family member, colleague, co-worker, anybody who needs to hear this conversation, please have them join. We are streaming to you live from JMMB Group Jamaica's YouTube channel, Instagram, Facebook, and X, Twitter. We are streaming live, and this is going to be a fantastic, rich conversation. Of course, guys, you know the drill. Tell us good night. Say hello. Go in the live chat. Tell us your name. Tell us where you're watching us from. Natasha says, Ray. All right, Natasha know the drill. Hey, Kadia, what's going on? Rachel, Raquel, Shanique. Oh, my goodness. Nappy G, Chantel, all the people them know it, Luke, what happening? So tell us where you're watching us from. Tell us any big audacious goal that you have for this year. If property acquisition of any kind is in your goal, let us know. But drop something in the comment. Let us know you're seeing us. Let us know you're watching. Call, text, DM, WhatsApp. Tell your people them to come and join this conversation. We're here for the next hour till 9 o'clock. We have a lot to get through. I'm sure Stuart is like, Carrie Ann, shut up. Let's go. But let me just make sure I'm bringing up my agenda because make I tell you something, guys. I am under manners. Don't watch no title, folks. I am under proper manners with my team instructing me and giving me my running order. So we are going to jump right into it. So Stuart, yes, you may recall you've done a couple of sessions with us in the past, and we know that we're going to go through a lot, right? So in the conversations with you, we basically have come down to 5 points, 5 things, right? And I'm not going to ask you to name the 5 things up front. I'm going to switch it up a little bit. We're just going to go through each of the 5 things one by one, right? And the first thing is that the first question that a lot of people have about property acquisition is, can I afford it, right? And that, of course, is a very important question to ask. And I'm just going to open the floor and ask you to just dig into the first point about affordability and about budgeting and just getting ready for it. So, Stuart, over to you about affordability and that all important question that all buyers really should be asking if they're looking to acquire a property.
All right. Well, we're on the clock. If you are looking to buy a property in Jamaica, you need to appreciate that your cost of acquiring this property is not just what it is being sold for or what you agree to buy it for. You have to also remember what I call the hidden costs, the cost of financing, the cost of legal services, the costs of your professional services. So essentially, if you're buying a residential property, you need to be able to appreciate having at least 25% of that price upfront. Now, an upfront is relative. Some of us, God is our finance manager, we go in faith. By the end of your transaction, you have to have that full 25%. At the outset, you hear about, 95% financing. So you figure I just need my signing costs. Well, signing costs are not just the 5% deposit. It's also going to be the cost of an agreement for sale. And those are ranging now. You have to share that cost. And that cost can be as low as 100 or 80,000 to as high as 150 or $200,000. You have to look at if you're going to get a mortgage, or even if not. I've spoken about not buying a pussing bag. You need to be able to get your surveys and valuations done, plus other things, and those things are also percentages of the value. So you need to have, as a rule of thumb, that 25%. Also, you have to be able to get if you're looking at financing it, a pre-qualification is important. And before you even go to anybody to get that done, that's a very cheap thing to do. You spend maybe $1,300 to get a credit score. But recognize this, 45% of your gross income, for those of you who are employed, no more than 45%, including the repayment of this particular mortgage loan, can exist. You can't have debt exceeding 45% of your gross income, including this amount of money. If you are going to look at a commercial property, you have to consider that you have a greater deposit. And we'll discuss that, I think, a little bit later. But as a rule of thumb, you have to start there. So don't think that when you see these wonderful ads, in America, zero down, foolishness. 95% financing, 100% financing, no, there are other costs to consider. So my sentiment to you is, because the property, whether it's new or not, you will have all these other costs, insurance. And I don't just mean peril insurance. I mean life insurance as a security for the property. So think about 25%. Think about having yourself in a position where you can get the maximum amount of money to borrow. So 45% of your gross income can't be spent, can't be leveraged. You have to have that. That is the maximum amount of debt you can have, including this new debt that you intend to acquire. For those of us who are self-employed, this is a nice goal for entrepreneurs. Only 70% of your income is recorded. So when you look at the debt service ratio for a self-employed person like myself, I don't have it as easy as Kerry or the others who are PAYE generally. You have to remember that the view of the lender is that because you're self-employed, there's no full guarantee. So they lend you only up to 70% of what you have. So take off another percentage off of that again, if you follow where I'm going. So that's going to be important. So, when we speak about closing costs, we have what I call the professional and hidden costs, because every mortgage has a cost. Nothing is free in this life except salvation, they say. So I think about it that way. So that's the fair rule of thumb as a guide for residential property.
Okay. So, I've got a lot of great nuggets there, Stuart. So I love the point, though, that you made about the difference between how people who are employed and get a salary, how they're assessed, versus how those who are self-employed are assessed. Could you share with us, because I think what you're speaking to a while ago, it sounded like it was referring more so to residential. What about those people who are looking to buy like an investment property? That seems to be a popular thing these days.
So when I say residential, you can buy an apartment. That's residential. You can buy it because you intend to rent it out. But there are people who are going to venture into commercial real estate, because guess what? In the commercial space, you may have your idea of better tenants, better income to be earned from it, less stress. The commercial tenant don't ask about the toilet can't flush. You sell them an open space, they tile it, they fill it out. But that sort of space is a greater ability for you to get a faster return on your investment, because given the current housing market or the property market we have in Jamaica, you realize everywhere you turn, no matter how the dollar devalues, we have a boom. We see things under construction all the time, but a lot of them, there is, however, a rental glut. I believe that the rental market is more saturated. And so getting prime dollar for residential investments, depending on what you earn, you may be thinking about a commercial side of things. Now, I treat investments, both residential properties can be investments as well as commercial. But a consideration is, if you are renting a property, if you're buying a residential property for investment, you can consider, for example, the rental to be earned as part of that financing strategy. So lenders will appreciate, some lenders who are more flexible will say, okay, what can we earn from this? But they may want to lend you a little bit less. Also, the fact that if it's commercial real estate, full out, like a part of a complex, a commercial establishment, you need to find they're going to lend you between 65 to 80% of the value. And that may range. So you have to have more cash up front. That's also going to be very important. So you may get a greater return, but you have to have a greater level of cash up front to manage that sort of investment. You don't get NHT for that sort of investment. But you can, for example, be living, let's say you're two people, there's a partnership. You have bought a property, wifey has, her name is not on a title. We're buying a second property now for the purpose of renting. We don't always disclose all these things, but if you do, and your lawyers know, they have to be clear, your lenders know, then you can use your NHT points for that purpose. But the expectation is that that's really for you to live. So, do what you need to do, a word to the wise. You can manage that between two properties, but you can still use your benefits. And sometimes your benefits can be transferred if you haven't utilized all of it. So this is why it's very important for you to be able to get good advice and work with good professionals along the way, be it mortgage financiers, your mortgage brokers, attorneys who know to ask the right questions if you have younger brokers, or smarter brokers who deal with younger lawyers, so that you're able to get the best result that is tailored for you. Not every suit can fit you off the rack. Some have to tighten the waist, the shoulder, different things you need, depending on your age, your financial ability.
Just a clarifying point, because I'm picking up a question here, and I'm sure she's not the only one, about the 70% point for the self-employed. I don't think that was really clear.
All right. So what an employed, because you are declaring your income. What the mindset of the lender is that they want to secure their investment, and the view is that a self-employed person has to retain certain earnings to put back into their business. And to that extent, most lenders will treat a self-employed person based on their returns, assessing only a percentage of the income that they declare. So for all of you who like to just, have no profit, when you're showing those returns, unless you have a banker willing to look at your bank book and look at your cash flow, the profit is what they look at as your income, not what you're generating. So again, think about it. It's good to ask questions before you go down the hole. So get your pre-qualifications and see. But what most of them are going to look at is they're going to say, well, because a percentage has to be left behind, the less risk-averse lender will say you have to reserve 30%. Others may say 25%. So that's why I'm saying it's not all of what you earn.
Okay.
Yes. Because you do get the luxury in the circumstance when you're employed of your gross income. Do you see your gross income? No.
Right. But they say, okay, if my gross income is $100,000 for the year, then that's what the mortgagee.
The mortgagee, correct? You are the mortgagor.
Right. That's what they look at. But if I'm a self-employed person who makes profit of $100,000 for the year, they're only going to assume that is $70,000 for the year.
And I'm an under promise over deliver kind of guy. That's your worst case. So maybe 85, but somewhere else lower 70.
Right. So that's what that 70% means. Right. And another clarifying question before we move on to the second point. Why aren't the hidden costs covered by the mortgage itself? Why are those costs separate? I guess
because those costs have to be paid up front. Just like when you buy that car and they tell you have to pay for the process of the lien and the stamp duty. The mortgage loan has to be registered, and that's how they get their money. They're giving you money. They're giving you money, but they have to make some money on the transaction as well. So they're
Right.
going to charge you some of those costs. And sometimes people often overlook that. And lawyers don't know those costs to you generally all the time. So you need to be clear on what those costs are. Every
Yes.
good lender, mortgage broker they can take, when they say that they can quickly spit out what you can afford to borrow, they can tell you what your loan processing fees are. You
All
want to be clear
right.
on that, and you want to ask them about things like insurance, because it's not when processing of the loan, it is what the loan requires. To get that loan, the loan has to be insured. So if you are the borrower, you have to get life insurance on that loan. You have to pay the cost of registering that loan, the processing fees. Now, what I'd say to you is this. Sometimes when those fees are shown to you, ball them down. Yes, ball them down. Sometimes you can ball them down. They want the business, and they know the options are all around the place. So ball them down and play them off another one. Play matey on them. Tell them, down the road I can get so and so, and see what they say. It works.
The views expressed by the guests on this podcast are not necessarily those of JMMB. No, seriously. But no, Stuart, I appreciate that. No, it's good to always barter. It's good to make sure that, we're always getting value for money. But I think that answers those questions for that segment. So I'll jump into the next one, which is a second point now. So we just finished talking about affordability and what we can expect and how we need to budget or get ready. What are the costs that
Hold
we
on.
can
I think there's
anticipate?
something that's very important to think about. So, guys,
Okay.
don't see this place and say to yourself, well, on paper, based on what I've declared, because I've cleared my credit card, so I've gotten a nice debt service ratio here. If you know you had to tell a story to get this sort of credit adjusted, and you know that you are already living basically from a paycheck to another paycheck, and you're going to add to that expense another $300,000, depending on what you're buying, or less. If you can't maintain that payment, or you are hoping to win the lotto, God will provide. That's the bad way to start. On paper, I'm not saying you're going to eat. You have to pray against sickness. You have to hold on to the old car, and you have to, but you're going to have to recognize you have to downsize aspects of your life to be able to have this investment. And if you intend to maintain everything at the same way, and if currently, without adding this expense, you're having a hard time meeting everything, you're living on your credit cards, you have a problem. You can't pay a mortgage with a credit card.
Absolutely.
So when
All
I
right,
say,
Stuart. Go ahead. Sorry. Go ahead.
just
No,
saying,
sorry.
recognize the important point is there are many properties that on a Sunday you'll find a foreclosure listing. That's because people are in arrears of their mortgage loans for more than 3 months, and they have no way to pay it. And they started off nicely, and some of these properties are lost within the first year or two of acquisition because we didn't appreciate what the hit meant. You fix up yourself nice, like for the first date, and you show a nice side of yourself, getting the right credit, but you didn't. That's not the reality of how you are living. So that's why I say budget wise. It's better for you to buy something that you can afford comfortably than something you're stretching toward. Because if anything happens, sickness, a problem, a challenge, you're going to find yourself not able to maintain the financing. If the mortgage rates go up, and you were pegged on that in the last year, people found themselves for the first time, maybe 8 years, with a mortgage rate increase. That increase, if you can't adjust the term of your loan to lengthen it to then make the premium lower, you may be buying it to lose it.
Yeah. Very, very important. All right. Second point, Stuart, because I'm mindful of the clock. Where's the best financing at my age and stage in life? That's the whole thing about, options that are out there. How
All
do
right.
I?
So shop around. Don't be loyal to the bank that you've been with for 25 years or since you're working, because different people have different approaches. Some banks are willing to lend you up to a particular age. So, for example, they'll say up to age 70, we lend you because they say by the age of 70, you should be retiring. Some, I think, they've gone up from 65 to 70. There are other institutions that say we'll give you up to 30 years. Whether you're 55 at this point in time, you get 30 years. But your obligation then is in the latter part when you're closing down, you have to pay it up, because if you know that you're going to have residual income or no real income going forward, it's up to you then to make prepayments on your mortgage. So in terms of age and stage, you want to think about an institution that's going to give you the best type of rate and the best period of repayment. And so you want to compare not just interest rates, because you may look at an interest rate and say, oh, this is a great interest rate. It's 7.7%. However, and in Jamaican dollars, you're talking about between 7 point something to 9, little under 9% for most residential loans. Those sorts of interest rates vary, but guess what? If your length of time for borrowing is shorter, it means that your monthly payments are going to be higher. Now, if you want, so depending on your stage of life and what your income levels are, that may be more attractive to you. A lower interest rate with a higher premium, with a shorter period means you pay less money over time. If time is on your side, then you lengthen the time. And my view always is that the time value of money over time, that you make what you're paying now would be far less critical. I was shuddering. I think last night I showed you this picture I saw online, a property for rental, $220,000. That was our mortgage payment.
Wow.
At 11 point something percent interest. So the value of money is a lot different. So if you are younger, you may want to get advantage of a longer loan repayment time. And then in that period of time, of course, you can make prepayments to reduce it so you pay less interest. If you're older, you want the benefit of that luxury to make the adjustments. So I'd say older people, don't lose hope. Find an institution, and they're out there. I'm not naming names tonight. You can look them up, who are saying, we'll give you 30 years. You may only have 20 more years of working life, but at least you have in that ability, a set rate that's low now, and then you can make plans, liquidating something over time, planning to use a pension amount or some windfall you have from something, or a settlement on a contract to then be able to make a benefit. So that's why I'm saying it's important to look at the two things: interest rates and mortgage premiums, interest rates and loan repayment period terms.
Yes, indeed. And of course, it would be remiss of me not to mention that, yes, I do agree. Definitely shop around for the best option for you. And yes, JMMB does do mortgages. I know some folks always have that question. So, Stuart, moving on to the third point now. And guys, I hope when you take note of these nuggets, and again, call your people, tell them for them to come and watch this, because we're just getting started. We have about 40 minutes left. And we're going into the third point now about, is the property a right fit for me? Because we got different kind of properties. We got apartments, we got townhouse, we got standalone house. How do I know which one is right for me? Because sometimes some people say, well, I'll just go and buy what I can afford. And since apartment is the only thing that I can afford, it feels like me just go and go with that. But that may not be the right fit for you. So I'm just going to hand over to you, Stuart, because I know you have quite a few nuggets to share in that regard.
That one, no, that is like buying a property is like choosing a mate. You have to be very careful. You may find things in the same price point, but you have to look at your tolerance. So not every property is for everybody. Why do I say that? Apartment living is not for all of us. There are some people who, if you are buying into a property, and that property, for example, is a place where primarily they're just Airbnbs, and you live there. You are tired of these, people coming in, free flow movement, strange noises or scents moving around your activity. You feel like you're in a hotel. You don't want to get that kind of lifestyle. That property may be attractive at a very nice price, but that property is designed and being used in a particular way where the other owners have a different mindset from you. Similarly, communities that are more owner occupied tend to have a different flavor from those that are tenant occupied. Because a lot of owners are not interested in maintaining property, just want to collect money because they want to make money. And they don't reinvest in their properties until they're properly fully run down. And so you have greater incidence of upkeep being a challenge. A lot of them are then contingent upon the tenant's rent to meet their maintenance obligations. You have properties where, so for example, how it's managed, how it's occupied are going to be very important considerations. Your lifestyle. If you have 4 cars, you're in the car business, you cannot buy an apartment where they give you 1 space per unit, or everything is on the sidewalk. You're going to create a nuisance. It's going to be a problem. You're going to have cascades, and we're going to have challenges. It's an unpleasant experience. Also, there are properties where you have to look at your tolerance. There are some prices that look so good to be true because they are not really true. The cost of fixing up this place or its hidden challenges are a problem. Because older places may have problems in terms of sewage, water, things to be apportioned, or things you have to actually fix up. So if you are not handy, if you are like Cliff Huxtable in the Cosby Show, who tried his best to fix everything, it didn't really work out. Some places you get a great price because it requires a lot more out of you. That having bought it, you don't have to fix it up. That may be a problem for you. If you can buy in low because the property needs work and you have a vision, you're creative, and you have more disposable income, then that may be a better purchase for you, because then you're going to buy a place that you can have equity in because you've built it up it makes sense. There are properties where people just have a dream. I want to live back in Mandeville. I saw it when I was a young boy and I want to stay in Mandeville and retire. In Mandeville, nice value for your money, maybe, because plenty house. But you can really live in Mandeville if you really work in Kingston. Yes, the new highway is here, and until the next local elections, I think Andrew is going to give us free ride on it. It's March. But the cost of living in certain places may be harder for you in terms of commute, the reality of these things. So look at your lifestyle, look at your objectives, and if this doesn't make sense, sometimes people become so frustrated they want to release themselves from the property. But if you release too early, you don't make the gains that you want to make. Because guess what? It takes at least 5 years for you to see a good ROI on a typical residential property. So those are some of the considerations.
Yeah.
And like I said, there are some things we can shut our eyes to, and there are some things we can't. And that's why I tell you, drive by the place at night time, see how it stays, see how the neighborhood look, how it works. Because if you don't have the temperament to manage certain things, if they don't bother you, great. If they do, nice houses are off Waterloo Road, but people, there are some business opportunities that are there. The oldest profession is practiced outside your fence. Can you live with that?
Mm-hmm.
Some of us are fine. We're anthropologists. We can chat to the people. Some of us are aghast. Can't function with these sorts of people. You're going to have a problem. So think about it. Check it out.
Yes, indeed. I think just a quick one about land versus, but when is it probably good to consider buying land as opposed to buying the house or the building?
All right. So when you're buying land, remember you're getting the issue of financing is also going to be different. You're going to have, for land, it's an acquisition cost. And some places when you buy as land, they may insist that you're buying into a development. For example, within a certain amount of time, you have to build. So depending on your cash flow, if all you have is land money, you can't buy in certain developments. You can buy in others. What you can get for financing will also vary based on land alone versus property. And so, it's important so for example, people who are buying abroad, foreign investors, we're going to talk about you as well. But even that, a foreign investor typically is buying because they want to use it for recurring income or a place where they're going to lock up and use when they feel like using it. So depending on the purpose of this property, you will have to give similar considerations for the return on your investment and is it really fit for purpose. So I think that all these factors, if you're further away, you're going to want a place that is secure and managed without you. It can pretty much be turnkey. It doesn't require your input or your maintenance. Do I have to turn off the toilet because the tank could overflow or the pit has a problem? Is it well maintained? So land versus house, I think land versus house is great if you have a long-term plan and you want to get your foothold in. Mm-hmm. And once you buy in a spot where you don't have to build immediately, great. And I think building is always going to be cheaper than buying turnkey, but it has other headaches. If you don't have the savviness to manage workmen and people and you don't have that wherewithal, and that's why there are some of us who are entrepreneurs and some of us who are 9 to 5. So know your tolerance, know yourself, because there are many of us who get shafted when we go into buying to build, but we get a greater return on our investment because you get more for your buck.
Mm-hmm.
I will appreciate over time, but there is a cost to it in terms of the harassment, the labor to manage, etc.
Mm-hmm. Thank you. And thanks for this clarifying question, Shanique. I mean, what we're speaking about here, guys, is, of course, purchasing property in Jamaica, right? So just to be clear, we're not purporting to be experts purchasing property across the world. So if you are someone who is interested or considering purchasing property in Jamaica, this conversation is for you. So if there are any other considerations that you have about financing, because, of course, folks who are not resident in Jamaica don't work in Jamaica. If depending on where you're getting your mortgage from, you may not be able to qualify for a mortgage in Jamaica, but maybe you get a mortgage overseas, and then that's between you and the seller down here. Those are unique considerations, but generally we're speaking to the real estate market considerations for the island of Jamaica, just to be clear about that. Stuart, there was a question about, maybe it's talking back real quick. I just want to jump in terms of someone wanting to buy a second-hand property because
Second-hand property meaning something that's been sold by somebody else.
Right. That's why I'm wondering if she means second hand, meaning, and maybe she needs to clarify it for us from IG. I thought she meant meaning by a second property. So second hand meaning like somebody owned it from before as opposed to a brand new property. But
What?
clarify that for us on IG. Whoever sent it, I'm sorry I didn't get your handle, but clarify for us and maybe we can try and answer that question.
And I think
Or
Shanique wants to know about tips for non-Jamaican foreigners who want to buy in Jamaica. What's
no,
relevant?
she was asking. That's what I was addressing because she's asking if the advice that you share, if it applies to Jamaicans who are abroad and want to buy property in Jamaica. And so I was
Yes.
clarifying that yes, you're talking about Jamaica. I mean, the twist in considerations would be where you get your mortgage from if you're using a mortgage to buy, because maybe if you don't live in Jamaica, you may not be able to qualify from a local
But
Jamaican-based mortgagee,
we
but
can
maybe
we could tackle that at this moment in terms of it, so that we level the playing field where that's concerned. Is that
okay,
foreign is not yard.
right.
So the considerations for you if you're buying with financing, it's a great opportunity. A lot of our properties now we find, if you talk to realtors who I deal with, they'll tell me that a lot of the properties are being bought by overseas investors. Why? Because they're getting a great opportunity to sometimes borrow money, cheaper money, because they're working on the valuation. They're earning US and they're paying back in Jamaican. They think it's fantastic. Once they have, but the trick is for that sort of person is recognize that in Jamaica, whereas in the US or in other areas, in other countries, we're looking at perhaps a credit score. In Jamaica, the focus is on your debt service ratio. Also, for a foreign investor, the same considerations apply, but in terms of financing, recognize that because you are not, there is a there's a lower appetite from US or foreign mortgagees, lenders, to lend for local properties because they have a harder time feeling that they can recoup on their investment. And some get scared about Jamaica's travel advisors and the risks.
Mm-hmm.
So effectively, what you find is that you can maybe borrow here, but once you do that, make sure you have your W-2s ready, your tax returns. You can show your income. That information has to be shared. In Jamaica, we're very invasive. You need to get all that information. Make sure you get registered in Jamaica in terms of your TRN. Utilize, if you can, contribute to NHT. Overseas investors can, and that's another way of getting access to money. But if you can then be earning US and paying back a loan in Jamaican dollars, you are winning, even though the interest rates may be higher, because you're guaranteed to find yourself in a better place to be able to finance. So lenders are willing to lend you. It's just about being open to having your information ready and also being a little more patient in the process, because the process here to close is typically 90 to 120 days, whereas you are accustomed to 30-day positions. And you may be wondering, why are you paying all these fees? The greater costs in Jamaica because we don't have the escrow situation of the close up, you coming to one place to buy and get everything sorted. You have to go through a longer process, a little more arduous. But that's why it's going to be important for you to get representation. But there are many people who are over abroad, but they consider Jamaica to be home. If you want a piece of home, you can have it. And we're going to discuss some of the considerations here that are material for you. So for you, don't think that because you get the big ratings with the 700 or 800 score that everybody wants you and they will give you special rates. You have to kind of recognize that without a footprint here, your debt service ratio is going to be very important. So your rent that you pay, all these things are going to be a factor. So make sure you are in a position to fully qualify.
Yes, indeed. Yes, indeed. We got clarification from it's Jalicia was a handle. Is there a year limit you should consider when buying a pre-owned property?
Okay, so anything over 40 years is going to need a sort of inspection. Now, in Jamaica, a lot of properties, depending on how they're built, I'll tell you, avoid nog. What's nog? Some there are actually units that are still built with dirt and muddy stuff together, as opposed to brick and steel, clay, concrete. But older properties can be good investments once you've gotten an engineer to assess them. Now, nobody asks you for that. They'll ask for a report on its structural soundness, and there'll be a life value on the property. So if on the appraisal or inspection, the life of the property is less than the term of the mortgage, you're not likely going to get the money. Particularly, and if it has a lower for sale value that's too close to what you're trying to borrow, you may have a problem. But I say to you, don't be afraid of age, because if it's in good condition, then the life can still be great. And sometimes the price can be lowered for you to be able to do the improvements you need. But we haven't had a challenge in terms of the quality of our structures. And I think certainly since 1988, after Hurricane Gilbert, building standards in Jamaica were put up to a greater rigor. And we withstood a lot of the challenges. So age-wise, I'd say to you, make sure for what are older developments, anything built in the 1980s or 60s and beyond. So a Mona property, for example, those were built in the 1950s. They're selling wonderfully. They're doing well. They were built well, and infrastructure-wise, there's been improvements on them. Very few properties remain as they were then. But why I say check it, because many people ask for forgiveness and not permission. You'll see in the news now a lot of issues about building approvals. There are many properties that have been built on that haven't been approved. There's nowhere I see this more than in Portmore, that part of St. Catherine. But there is a vigilance. So before you pay, check it out. Spend the extra money and see, well, did the second floor really, was there proper reinforcement? Or will I, on the next earthquake, like what happened to us in the news, where we saw a whole floor collapsed on a house? You have to get checking on these things. So if the structure is very different from original, make sure you get an engineer's report to assess it and confirm that there was approval for this property, because you may find yourself in a lurch now where you want to do something else and the house is in breach because you have your bad mind neighbor who reports the house because you don't like the fact that, let's not go there. I'm telling too many stories. To manage yourself, make sure the property is not in breach. And breach is the oyster in terms of building approvals. If you want to modify, and if you're trying to modify now, was there something poorly done that's going to cost you a lot to fix in the long run? So I'm more concerned about that than I am about age.
Okay. Again, the views of the guests on JMMB's Elevate 6.0 are not necessarily the views of JMMB, seriously. But thanks, Stuart. Okay, let's jump to point number 4, because time is coming down and I want to make sure that we covered everything that we had set out. So we've gone through affordability and knowing can I afford it and how. We've gone through best financing that's available for my age and stage in life. The third point we touched on just now was which property is a right fit for me: apartment, townhouse, standalone house, land, etc. Now, the fourth point is who's got my back, right? Everything from legal advice in particular and other critical considerations that we must. So go into this one, Stuart, because I know this one is rich as well.
All right. Now, you know that song, Full of Big Speech and your backative week? Make sure you have good backative. Why? Whether you're buying from abroad or you're here in yard, you have to recognize that the landscape is significantly treacherous if you don't know it. Picture trying to walk in a place you don't know. You're going to buck your toe. It may bleed. Why? Areas in which you're unaccustomed. There are different scenarios you can consider. And I'm going to look at 2 for you. A pre-construction property versus one that's already built. When you're buying something that is pre-construction, the biggest problem is you're buying in faith that this thing will actually work. So you're going to have to get people who are prepared to do some due diligence for you. Everybody looking at these things, some people have interest to serve. So not everybody's thinking about you. And I don't think people can serve 2 masters. If a listing agent is trying to help a seller to sell, that's not the person you want to help you to give you advice, because they're trying to get it sold. Now, saying they don't have integrity, but their focus is on getting the thing moving. You want somebody who's prepared to look at your side of the fence and say, well, boy, can this really work for you? So, for example, what's the track record of this particular developer? Many developers now are building, but subcontracting the work to other people. And there are many who look very pretty on the outside. And by the time 3 months to 6 months finish, the defects are up the wazoo. Whether it's high rise and the water can't get beyond floor 7, or whether it's a case where the pretty tile is lifting up after 6 months. So know your developers. Recognize, are you buying into a place where there's an approved developer? So lawyers who are just trying to make a sale are going to not think about some of these things, because a lawyer's job is to be a pessimist. Look at the worst case and say, well, even the worst cases, can this make sense? And that's something you learn by experience and sometimes making mistakes too. Well, it's the same experience. No experience is wasted. But I am concerned that in a pre-construction scenario, is my developer registered? Is there any issue with getting title and those experiences? And that's going to be critical. So look at the history of the developer. Is the developer known? Does the developer have a track record? If you're buying for the first time a new developer, pricing be good. What's the timeline for completion? Does the contract allow me to get out at certain points? What are the protections and safeguards? These are things you have to consider in that sort of development. Also, make sure that you have somebody who is assessing the progress and how much money they want and what are you holding on to get as your guarantees. In law now in Jamaica, you're able to get protection from the real estate board, but if this development is not approved and you're buying into it, you have a problem. Have you asked critical questions for this development? Are there approvals? Now, it's becoming more relevant now. I think if we had this conversation 4 months ago, it may have seemed less topical in your minds because for the front page of many papers for the last month, we've been hearing about a particular development. But approvals are critical. And now that there's shame in the eye of a lot of our municipalities and our NEPA, they may be hard to get approvals. So make sure the lawyers are asking those critical questions. Let's turn to the flip side now in terms of an existing property. Lawyers have to ask smart questions. When properties are owned, are they being sold by the real people who are selling them? Sometimes the man who come to you and say I'm selling the place is not the owner. Has there been a true investigation into the title to see are there any caveats? And does anybody ever lien over this property? Is there a cas with the husband and the wife and we can't find the wife to sign? And the lawyer gets cold feet because he think the husband and the wife are in agreement, but it's not go so. These are real stories. Truth is not as strange as fiction. It is stranger. There are all sorts of scenarios. So it's somebody who's willing to do their due diligence. Do you have experts who are going to come in like I've told you before on your programs? Whereas in Jamaica, the focus is on the value and the survey. What is on the plan matching what's on the ground. Unlike in other countries where you do home inspections and check the electricals and the plumbing, have you done these things? Because when you sell, the owner has no business with you after that. You say, oh, it's not working, sorry. You buy it. Because they say you buy it as is where is. So make sure you have taken time to get proper professionals to look at these things for you, particularly if you're buying from a distance or you're buying with little experience. Because there's some people who know cars and nobody have to go with them. I bring my mechanic because I don't know about the car. Make sure you have people who can come and tell you about how the fixtures work. Was this extension done properly? Did they build the master bedroom, the new pretty bedroom, over the septic pit?
Mm-hmm.
That's the real story. I had a client like that one day because I brought in an expert. I said, check it out. Is the place nice wood for cool Jamaican, climate? Chichen yamming it out. Has it been properly treated? Is that lovely tree near the house a breeding ground for termites? So there are important things to look at there. You also need to consider a good lender who's going to work with you in challenges, who is prepared not to be too rigid. So some lenders who focus on selling cars, they're not so good about housing, different market, different strategy. Make sure there are people who are prepared to inform you and guide you in the process along the way, who don't tell you information last minute. Because I've had the experience of people come to me as a lawyer. I can tell them what certain costs are clearly. They're working with the lender. And it's when we come to the end, there's a problem. I say, why you don't send the transfer? The people want to say, they say that's to close. Boy, the lender said that I can't, and I can't get the LU or the commitment. And I'm saying, what the hell is going on? You got a pre-call. Why are you waiting so long? You never remember, or there's the dispute as to whether you were told that you had to pay X amount of money down for the insurance and the mortgage fees. And you say, but they never told me, because unlike Stuart who wrote it down and gave it to you, this person gave you a piece of paper that you failed to read and didn't show me the lawyer. So there are lawyers who are going to be willing to explain, and there are lenders who are willing to give you that extra detail. So you want to be able to look at that. So be able to remember that the existing property is not just what you see, it's what you're not seeing in the structure, in the surroundings, the limitations. For example, there are many places you're going to buy into now and there's no water. Do I need a tank? Is the plumbing all right? What's the water bill looking like? Is there a leak? Because the leak could be under the ground. You have to dig up the whole place to find it. These are things that you can simply do. They're good plumbers these days that can bring you a thing and can test and say, no, these are challenges. Mm-hmm. But look at structure, because like I said, typically when we're buying, we don't have room for much else. There are great investors who are just buying and flipping. But to flip a house is buying into a market and appreciating how it works, and you have savvy and knowledge of construction and properties. If you don't have that, you need to have good practice. So I think you need a good lawyer to be able to manage that. And let's not forget something else. Sometimes you get some great deals, but the place have a tenant, the house has a tenant in there. Getting a person out of a house is very, very hard. A house being sold is not a reason to remove a tenant. Keeping it simple. So at the end of the day, you're going to have to remember that you have to have a lawyer who can manage that challenge. If you're buying up a foreclosure, so it's a great price, but the owner is still in there. The lawyer you have may be a property lawyer who doesn't go to court. You need one of our rough and tumble type lawyers who is not afraid of courthouse, not afraid of rough badness and badmanism, to be able to deal with a case and have a strategy to get the tenant or the old owner out of the place. So make sure you have the depth in your team to manage the circumstances that are, or the risks associated with your particular investment.
Right. Before we move on to the last point, Stuart, quick question: where do I find out who approved developers are? Where do I go to get
the real estate board? We have
go to the real estate board.
reb.gov.jm, I believe. And there you can go into the offices. It's the same place as the Commission of Strata Corporations, which is also very important, because if you're buying into a strata, for example, an apartment, how could I forget this, Kerry? And Lord have mercy. When you're buying to the place and the one seller you have is nice, but the other people, they're not paying their mortgage, not paying their maintenance and their contributions to a strata. Because just like we said, what was good for you, the cost of an apartment is always going to be greater because of the maintenance and the shared costs. So there's a fee to be paid by your strata every year to the Commission of Strata Corporations. Are they paid up to date? Now, when I ask these questions for people, some lawyers scoff at me, but I say, guess what, guys? When you buy it, you buy the risk. Just like with water, if water is old, you have to pay it when you become the owner. Don't buy into a place where there are these problems. So you have to do your due diligence. So due diligence, luckily for us in this day and age, you can check out apartments very easily. So I say to people, if you're overseas, maybe apartments are better. Anywhere where you have greater access to the information. Apartments are regulated. Townhouses and houses, unfortunately, are not. Very, very few are. HOAs exist. There are a few schemes like that, but not a lot of them. Most of those developments, townhouses or communities like a Mona, etc., those are built on moral suasion. Nothing to compel people heavily. So very, very important for you.
So, suppose I'm buying from a first-time developer. What record would the rent board have on them?
They have to be registered and approved. And so if you're buying from a first-time developer, then what you really are looking at now is, I'd say to you, so of course, when you're buying, you want to consider things like escalation clauses. You want to look at who is there, and you want to keep a vigilant record of checking it out. You want to go and see the progress, because there are some places where the progress is going well, but the financing is weak and they're not going any further. I like places where you say approved by, and you can see, a reputable financial institution is backing this place, because some of these places could be a place for laundry. And when I say laundry, I mean rinsing, and you end up getting caught in a mix-up. So if no one knows the developer, has never heard of them, everybody has to start somewhere. But do you want to be the first? So sometimes looking at it, I would say I'm more keen to wait a little bit. You may pay a little bit more, but at least you are seeing the progress and the finish line. If there's no clear finish line, you want to be able to get an exit clause. So when you have to pay too much money up front, or then tell you no lawyer, you don't need no lawyer. Red flag. You're calling, you can't get information. Every detail of the property is just like a plan, and you can't see the place. Go to the site. If you say no ground broken or what, you look there, they say, but this is a parking lot. This is not paradise. Where am I? Don't look like there's anything happening. This is not the place for you. So what I'd say is, you need to be able to have confidence and trust your gut, whether it is you have a 44 ways or a 22 ways. Trust it. Instinct tell you this don't feel good, you feel uncomfortable, keep it out, because like I said, property acquisition in Jamaica is not going to convert for you very, very quickly. You have to ride a wave. And invariably your gains over a time are going to be lower initially. And the cost of ownership is higher than the cost of returns. The cost of ownership is going to be great for you to manage, and you lose out because you don't have equity. And when I say equity, guys, that's a big word for saying how much of the property's value is based on a loan, or what you have owned, or what you have in it. So if you got 95% financing, your equity is 5%. If you bought a property for $100,000, $30 million, let's use real money, but it's worth, based on a valuation, $40 million, you have at least clearly $10 million in equity. And if you borrowed the other 30, and of that 35, you borrowed 30, so you have another 5, so you have $15 million in equity. That's what you have, that when you sell, you can get back out of it. So what you always want to consider is, am I building equity? or am I not? So home ownership, don't build to your like. If you're going to buy for investments, build for what you know can make sense. Don't go for the grade A finish, because the tenant is not going to do that for you. I can't forget I have a family member bought a property fully furnished. We said, great. First tenant was nice. Second tenant, when we go back in here, the tabletop clean. So when the carpenter go and say, it look like this thing, then put them body weight on it. I need to say no more. When your furniture is being used as an apparatus for other activity, your fair wear and tear now becomes greater. So recognize that if you're going to be buying something and you have certain types of furniture that you like and you love, it can mash up, and the cost of reinstating it is much greater. So sometimes you have to buy cheap to buy plenty. Don't buy too expensive if you pick a type of market. And roof, not to mention those kinds of problems. So you have to be careful. And that's why I'm saying, get a setup, spend the money up front rather than try and spend the money later. So whether you're buying here, and particularly if you're abroad, you're not going to be physically here. You want to be able to know that there's a team of people who have eyes and ears on the ground. The drone pictures alone won't help you. You're going to have to see it, because you know that things are designed to sell. And you may not see that behind my picture there are other problems. I only show you a piece of the room. The picture don't show you 360 degrees. So these are the important things. So, check your property at night, check it when it rains, check on roof work. If they can provide you the work of who has done work on the property, these things are important. Who are the handymen who know the place that you're willing to work with? These are going to be important considerations.
Yeah. All right, guys. So here's the thing. We have 10 minutes left. Couple of housekeeping items. One, we would like you to recognize that we do have a free ebook that's available with some of the main points that would have been covered in this presentation for you, and also an opportunity for you to make your own personal notes. We'd love for you to complete a survey. Here is the link to the survey. Please make a note of the link. Once the live is recorded and the recording is uploaded, especially on YouTube, you'll be able to access the link in the description box. But still, please make a note of the link. We want your feedback, guys. We want your feedback on this particular session, on the presentation here, to tell us what worked, what didn't work, because, hey, we do these things all the time, and we want to get your feedback. And then, having completed the survey, you also will get a chance to win an Amazon gift certificate. We'll pick out a couple of winners among those people who would have completed the survey, so please do that. And as we said, we'll give you the opportunity to get access to a free ebook. We have 1 point left on the agenda, Stuart, I wanted to discuss. Now, here's the dilemma that I'm playing through in my mind, and I'm backing you up on live stream here, because we do have a few questions that folks have asked that I'd love for you to get the opportunity to speak to. The quandary that we have is that 8 minutes is not enough time. You can keep the link up there for me, Jess. Thanks so much for the survey, so folks can continue to copy it down. 8 minutes is not enough time for you to finish your 5th point or to answer the questions. The problem we have on the Instagram, folks, Instagram is going to kick us off after an hour, right? So if you want to stay and have maybe an extra 15, 20, max 30 minutes, because I need somewhere to live when this live is over and I don't want to stretch my husband too much. If you want to flip over to YouTube, guys, JMMB Group Jamaica, we will still be streaming on YouTube, because Instagram, sorry, so StreamYard work, they're going to kick us off at 9 o'clock sharp. But we want to continue the conversation. If we can, Jess, let me know. Drop a note in the chat. If you guys are interested and want your questions answered, could you just hop over to YouTube while we finish the conversation and answer the remaining questions that we see in the live chat here? So we give everybody justice, right? That they get the questions answered, and also we cover the information that we
All right. So before everybody, for those who can't go anywhere else because they only are on YouTube, on
IG.
On IG. A big factor as well is why also a very important thing in Jamaica, particularly properties that are it's less likely in apartments, but land and homes, is if you have a squatter. Why? The owner of a property may have a title and the title checks out beautifully. But unless you've assessed if anyone else is claiming an interest in that property, titles are defeated by people who can show an active possession for 12 years or more. And there are situations where even if you have a mortgage and the property has a mortgage that's existing, a squatter can defeat a mortgage. So there are people who have bought properties and have effectively left them. They've not been had no great presence or vigilance. And it's most prevalent with land. I have had a couple of times where people try to thief apartments and these things, or a townhouse here and there, but it's mostly land or a house further away, particularly outside of the corporate area, although we have some of those too. Land thieving is a big deal. And so if people have squatted, their rights actually can trump a registered proprietor's rights. So that's why inspecting is important, seeing if someone is there. I mentioned commercial. If you look at a commercial place and the seller tells you, oh, I'm getting X amount of rent, get proof of the receipts of that rent from, because sometimes the lease that they give you is not an indication of what's actually being paid. That case recently where the lease spoke to increases every year of 2.5% on US over 6 years. And for the 6 years, they never paid the tenant was never charged the increase. So you think you're getting X amount, your lenders lend you based on the projected importance and the income you get, unless it's actually being collected. So you have to trust but verify. 5th question on this.
Wow.
5
yes,
minutes. Come.
Yeah, I'm the manager now. It's my turn, boss, for me.
We can do it.
Wait, no. So we're gonna keep going, guys. After 9 o'clock. Thanks. Big up to the IG people who said they're gonna be able to hop over to YouTube, because YouTube you can just go on the interweb and you don't need an account to watch us on YouTube. It's JMMB Group Jamaica. Yes, there. So thanks, guys. So yes, 5th point. The 5th point now, Stu, was on the whole matter of Jamaica being different from foreign. Right, key differences in property acquisition. You see, we're going ahead. Differences in the property acquisition process in Jamaica, managing tax exposure expectations. So
right. So like us, and I did this already. So you those who are paying attention, I think we did it in the time. Remember, make sure that you have more patience, and you recognize that what you expect in other jurisdictions where there is tied to your acquisition is the inspection of the property's state and condition. In Jamaica, the focus is on the value. Does the value match what they are asking? So that's a valuation report. And are we getting an indication of whether there's any breach in terms of what's on the ground? Has there been some encroachment in terms of, is the building extended beyond where it should be? Do the covenants line up? Those are important things. Also, as a foreigner, recognize that we are governed by other types of rules. You're accustomed to HOAs governing most things. We don't have that in every type of scenario. It's really only for apartments that are governed by what we call a Registration of Strata Titles Act. There is a plan for a Gated Communities Act to cover townhouses and other schemes, but that's not here. So you want to buy into places where there's greater governance. So make sure that if you're buying into an apartment, look at the covenants. Why? Big important fact. If you're buying to invest at Airbnb, but the covenants don't permit it, there was a case decided last year that says that, guess what? You're kind of dark. You're breaching the covenants. There are cases that I've actually argued at this Commission of Strata Corporations where they've brought cases there and they can challenge your entitlement. But if you're in breach and you face a court order, that's a big problem. So make sure the covenants allow what you want. Make sure if you don't want it, that the covenants don't allow for it. You don't want to be there. Covenants can be amended or what they call modify the bylaws, but you have to check those things. So make sure you've looked at strata plans. Very, very important. So like I said, for foreigners, make sure you buy into properties that have a greater sense of regulation to help you from a distance. If you are the sort of foreigner investor who is coming back here or who has a presence here through some proxy, then you are better off. But my advice is buy into places where you can have better management. The ease of management is easier, so the investment is greater. It's a greater opportunity for you to realize your investment without the headaches. So properly run apartments, which means get a sense of how does it work, what's the nature of the committee, being that sort of involvement, how is the use of technology? Are they using only a bank transfer that doesn't work with you where you may be? Those are big deals, because guess what happens now? With an apartment, if you don't pay a maintenance, they can apply to sell the property. And you'd have to be in arrears for a very, very long time. They have that power. So what I said to you is think about those things, think about them carefully. But it is about setting expectations and being very clear.
Yeah.
And don't expect. Yes, sorry.
No, no,
ask the question.
it was on the same point because somebody asked a question here. And yes, guys, drop your questions because we're coming down to time. We have just under a minute left. So we're gonna try and keep up on IG for as long as possible, but we may get kicked off, but we'll definitely still be on YouTube if that's easier, and probably even Facebook, but definitely YouTube. But there was a question because it's great that you pointed out the fact that you really need to have your team of people watching your back. So yes, definitely a great attorney who knows how to represent you and represent your interests. But somebody was asking us, who is that whole team? So your attorney, I hear something about plumber. You need a plumber too?
Or you need to get the professionals on board. So make sure you have a good electrician, a good plumber,
Electrician.
You have somebody who has an engineering sense, because I say a lot of properties have been built or modified without building approval. We have contractors, and we do have not everything is architecturally designed. So in terms of integrity and safety, you need to ensure that these things are there. Make sure when they've built drainage, big problem. We've had some serious challenges with properties that have been built, and how they've been built on without any proper consideration for drainage. And so you buy, and what you may have the land existed here, house was here, but now a house is above it. And how they put up a wall or changing water flow, flood out, problem. And all, like Rosie want to call the contractor, and your 30 grand fridge and 30 grand just a mash up, you have a problem when you don't have these things in place. And you want to make sure that you've gotten a good surveyor, because there's sometimes, but not all surveyors are equal. And sometimes when the surveys have been done, they don't pick up all the problems. And there's some things that people overlook that become a problem later on. And when you find it out, when you want to refinance the property. You buy a property where the fence is covering a gully for security purposes, but that gully really is the government land. And I've made a little change on having to advocate for a lender, a borrower who's in his second mortgage on a property. And the same person anybody the first time says, oh, we found a breach, because some bright spark has realized that there's a problem here. There's a development I remember doing a property that was sold for not the third, fourth, but the fifth time in a strata. But it's a funny strata. It was really townhouses, which were master strata, because they had one building that had 2 floors with 2 different entrances, 2 properties. So they were mixed then. But the strata plan for 30 years was overlooked, where the second floor was missing. And it meant that we had to do an amendment to the plan. So when the man wants to sell and my client was buying, the mortgage was now stopped. The same person who gave the mortgage the last time refuses this next mortgage because they realized now suddenly there was a problem. No surveyor saw the error. Wow. Important to look at. So sometimes you're looking at cheap and you get catch. What cheap not good, what good not cheap is a granny, would I tell you? So be careful, because sometimes you buy cheap, you have to buy plenty, you have to do it over again. So wow. I think that's a good team. And I think that you also want to have, if you're into pre-construction, someone who understands bills of quantities, the cost of things, how they work, the stage of development. Because if you're buying and building, for example, when you're going to your lender is going to pay you based on drawdowns. So if it was you're buying to build, it's a great idea, greater equity. They're going to pay based on the value of things. So if you have your nice uncle who built plenty house, yeah, I know about house and construction, but has zero sense of how to manage things and costings and how the finances work, you're going to have a problem. Now, if you're buying it, so I said the trust, the old developers, the known ones, the Gions, the Gores, some of them, the Gions may like to use lawyers, but a Gore or a New Era, they don't like lawyers. They have teams of lawyers there. You run the risk of just make sure you've checked your terms and you're very clear. Because some developments have waiting lists, and the idea is get in now because you don't have a chance after. Something is there for you. What is for you can't unfor you. A phrase I adhere to. And sometimes if you feel you're being rushed into something, there's a reason, because you can blame no one but yourself at that point, because you've signed, you've agreed to it. So make sure you understand all those terms and conditions. If things don't make sense to you, make sure you get the clarity before you put your money in it.
Yeah.
Yeah.
All right. Good stuff. So, okay, guys, so we are past the hour. We're still going on YouTube. I don't know what's happening over IG. I don't know if they kick us off yet, but please drop your questions in the chat. I'm just going to go through those that we've been getting. There's somebody asked specifically for a nice tight definition of what is a debt service ratio.
go to your lender. Joke. A debt service ratio means the percentage of money that you're borrowing in relation to your income. Fair?
Pretty much, yeah. So it's pretty much what percentage of your income is being used to pay debt.
Pay debt.
Right.
So in Jamaica, 45%, no more than that, can be used to pay debt, including the debt you're going to acquire by buying this property.
Yes, indeed. All right, great. Thanks so much for answering that. All right, guys. Yes, so we're just going to hop back over to some questions that came up earlier. Yes, Stuart is funny, but the information he shares is deep. All right. Any advice on how to, or whether, I guess, to acquire property that is not on the market, like it's abandoned?
So what you do there is we have a great tool now in
From
Jamaica.
Tish.
A great tool. When it works, it's been a little spotty these days, but it's generally been up to date in the law and been revamped recently. The National Land Agency, commonly known as the Titles Office, nla.gov.jm. A wonderful site where you can actually look at properties. They have a map, and you can click, if you know that you can search by title, which few of us know, title references, but some of us know about the address. You can search for property by the address. You can look at a map of the whole country. It's been set up, and you can click on it and actually find a property. If you know a property, 6 Darlington Crescent, but at number 8, it's been empty for a while and bush up. You can click on 8, and when you click on 8, you can see who owns it. Look at the title, and you can get the details of who the owners are, and then you can do your searches and find who the owners are, and you can contact them. Talk to a neighbor. LA map has been down, it has, but it's actually a great tool when it works, and they're going to fix it. That helps you to find that information. Also, sometimes you could put up signs. So I think it's all about what I say to you all the time is when you want something, talk about it. Because when you keep it to yourself, nobody can hear you. And Jamaicans love to chat. And people, talk about what you're looking for. I'm interested. People will know somebody. Oh, I have an auntie who's thinking about so-and-so. Get in early. Chat to her nice. Visit. And once you have your money, you're going to be in a better position. There are also foreclosure listings that companies have. And that's a little more difficult. But what I said to you is another good way is if you're in touch with realtors, we have a multiple listing service that every realtor can have access to the same types of properties. A good realtor, how did I forget a realtor in your team? Need a good realtor.
Yes.
A realtor who is, because realtors are paid. And they are paid based on the commission, and they sometimes share the commissions. But you need your own realtor, not just the one who is selling. If a selling realtor meets a buying realtor, they split the fee, and that's why they get the most money, because it has to go around to more hands. But realtors have listings and they'll get information, so keep close to them. You're interested, I'm looking for something, and once you keep talking to your realtors and talk to more than one, you have some matey on them. It's all right, because the information will spread and you'll be able to get what you need. It's business, not a relationship. There's no covenant here. But I'm saying realtors will sometimes be aware before they put the listing up. And once they know that you're serious, if you go to a realtor with your pre-qualification, they are comfortable. If you're not borrowing that way, but you have proof of funds in a bank account, or your lawyer holding money for you because your auntie didn't leave some money for you, they can send that. They are able to sell somebody quickly. Valuation reports are going to be, I'm jumping to, I see the questions, Case. I'll leave it to you.
Right. Yeah. Thanks so much for that. We have another question coming up from, I think, Safi, but Clive had asked a question earlier. Clive, I'm glad you mentioned real estate agent, Stu Realtor, because there are some questions that Stuart, as the attorney, would not be the best to answer in this forum. So like Clive had asked, as a young professional, he's interested in land acquisition. What is your recommendation in terms of parishes to acquire prime residential land? That's a question I would suggest you ask of a realtor, right?
But I can say to you, well, it depends, Karen. It can be what you want. You want to live or you want to earn income. It's very easy. You can ask yourself, like, where am I getting the best rental income from? The answer is very simple: cities, as opposed to country areas. More rural areas. Mm-hmm. Anywhere where land is cheaper will likely give you less return on investment, unless you're buying in anticipation of a boom. So suppose if you had land in Montego Bay near Bogue or Freeport, you're smiling today, but that would have been a long investment over time. So that's an issue that's going to be based upon your needs and where we see movement going now. So with the infrastructure improvements in Jamaica, so anybody looking at the example where you're seeing the news a couple of weeks ago where they're going to build a bypass in St. James, there may be areas that are going to be more attractive. There's a nice article in the papers last week. Both local papers have good real estate lifestyle sections. Keep active, guys. Read. Don't just watch Instagram only. Read your papers, because those sections will give you insights into things. They're topics about different things that are happening in the country. And if you're looking just like how you look at stock markets and invest, I'm not giving you stock advice, but if areas have boom and things are changing, or you look at a neighborhood that is actually transitioning from one phase to another, then the value of that unit is going to be greater. So if you have properties where there were homes, and homes are now being replaced by developments, recognize that the value of the land there is going to be greater. So if you can hold on to that and have it, you're in a greater place. Most things are overpriced. The market is, like I say, in a funny space. It's great because no matter what's happening, like the bubble dome is not popping in Jamaica, but we are seeing a shift on the rental side. So if you're buying just to rent, and that's why I said you sometimes maybe the thought of commercial real estate may be a better idea for people who are trying to look at a good return on investment. It's going to be very, very important.
Yeah. All righty. Question from Safi. Yes, guys, we know IG finally kicked us off, but we're still here, certainly on YouTube. Safi asks, for new construction, the buyer has 6 months to report defects. I don't know, Stuart, you can say, what if additional defects arise after that? What is my legal recourse, if any? I don't know. All right.
So the issue is so what that means is there's a thing called a defects liability period. So it's pretty much a warranty. Okay. When you buy a property, there is the idea that the warranty is for 6 months. And after 6 months, they're not responsible. So if the tires lift on month 8, you only argue it is moral suasion. But what I recommend is, that's why if you're buying into a property like that, that's pre-construction, get your own inspections done before you take possession. So I go in as a lawyer, I take in my pictures, I'm turning on every switch, turning on every pipe, make it run. I'm going to bring in people to check the wiring, check these things to make sure it makes sense. Because if you can identify within the first 6 months, you have recourse. If you don't, it is a short time, but that's the nature of the industry and the standards. But you have less recourse after that time. The problem has been identified and acknowledged, and it continues. But you must have the acknowledgement in that time, because after that time, if the contract says it doesn't exist, then you really have no recourse against the seller. And that happens often. So make sure along the way you see your unit identified and you keep checking.
Okay. All righty. All right. So you're frozen, Stu, for me. I don't know. You're frozen for me, but we're still hearing you. So we're going to keep going. Jasmine, we have a question from Jasmine. Just trying to pick out the questions, guys, that I think certainly a lot of folks would have, as opposed to getting into individual scenarios. But what's your advice buying a property through private treaty? Pros and cons, please.
All right. So private treaty, for those who don't understand it, I don't know why I'm frozen, and so are you, Karen. But for private treaty, that's when you buy a thing that so private treaty would be it's typically thought about after a place where it's being sold not by the owner. So the lender may be selling it. So there's been a foreclosure. You are going to buy the place without the ability to do certain inspections. So you have to do those after the fact, because most times there's acrimony between who is in there, who has defaulted, and you. And sometimes the lender wants to move quickly. So they're selling you a puss in bag. I know my screen is blank.
Oh dear. Well, we're hearing you. We're hearing you just fine. Right.
Okay, and I'm back.
Okay, no. Oh, there. Yeah.
Progress. Yes,
Yay.
I'm back.
All right. Great. All right. Okay.
Home equity line of credit. This thing is in Jamaica.
Yeah, it does. It does, doesn't it? Yes. But guys, we just I want to make sure. What's the difference between Denisha Blair? Hi, Denisha. What's the difference between a quantity surveyor? I don't know what a BQ is.
A bill of quantities. All right. So a quantity surveyor for a bill of quantities is somebody who says is the value of what? What's the value of what has been built here? So if it is, in simple terms, if you're building or you're buying into a property and you're drawdowns, and they say after we've reached 60% completion, you make another payment. The quantity surveyor can come and look at what's here and say, this is 60% of the cost to finish it. Or the value of finishing is that we are now 60% completion. The QS, quantity surveyor, can also, he can prepare a costing and tell you what is the value of what's here or the value of what will be the cost required to take us to the place of completion. And completion is also a very funny word to think about in your contracts, because in some contracts, completion for a commercial place is different for completion for residential. For commercial means it is equipped for installation of certain things, but it may not be a floor. You have to tile it. But it's level, it's prepared, but it doesn't come with walls, erected floors, pretty finishes all the time. It may have less finishes for completion for that purpose versus for residential purposes. A surveyor now, and it's a land surveyor versus a quantity surveyor. So that's the full title. The land surveyor is the one who looks at what the title speaks about in terms of a plan and what's on the ground. And he can tell you if the plan conforms, if the property conforms to what's on the plan and the covenants on the title. The big word for covenants and bylaws, any restrictions regarding this property or those that are around it. So have we built too near to a boundary? Have they put on a carport that is too near to where it should be or too far? Has it gone onto the neighbor's property? You know, have we extended? These are the sorts of challenges you have to be able to be clear on, because what we identify very quickly in Jamaica is not whether the house is electrically sound, is whether there's a breach. You know, so for example, there are older schemes that say this scheme, you can't erect a second floor because it was built with a particular type of roof. Those prefab houses, for example, in Portmore, were designed a particular way. They weren't designed for second stories. And they may have been extended. You have to then satisfy that there was building approval. So I had a situation like that with a property in Portmore done by Wicon recently. And what we had to do is we had to tap back. But thankfully, this particular owner had gotten permission, didn't seek forgiveness, and there was no need to do any modifications. But if in fact these things are not done, you have to then get plans approved. And the challenge is sometimes when you buy into things that are breaches, the solution is not that they won't be modified. They say you have to cut off the hand that offends you. So lick off part of the house because they're not allowing that sort of modification to be done.
Okay. All right.
Neighbors may object.
True. 876 girl had a great question I think everybody can benefit from. Where do we find foreclosure listings?
You find them on, so lenders will have these listings in institutions. They're sometimes in the papers, and realtors also are aware of them. So websites that realtors have will also have some of those listings as well.
Websites, sorry, where?
Realty websites, you know, from various realty houses, real estate houses will have realtor houses will have them. But those are great if you have an appetite for risk. You can get some great opportunities out there. But make sure with that you have a good team, good lawyer, and a good team to help you with knowing that you're buying that. You must, I say to you, make sure you have at least another 30-40% of the value put down to do the things you need to do to bring it up to your standard.
Yes, indeed. Okay, next question from King David. Is it recommended to ask for a valuation report when buying land?
Recommend. You better do it, because remember, you know, what I want to sell the thing for is what I feel. I want $20 million. But if this piece of land is not level, it have plenty holy in there, so stone that can't dig up. You need to get a valuation for land, because when you're buying it, the value of the land, you get no equity if you bought beyond its value. And value is relative. You may love that area as the first place you met the lady of your dreams. Every time you go there, say you make money, your hands scratch you. But it doesn't mean that it is worth it to somebody else. And when you're buying things, if you're not buying for sentiment, you're buying for investment. Investment is really tied to, is what I'm paying less than what it's worth? That's the ideal scenario, because that's a deal. Because when you pay less than it's worth, you have more equity. When you buy for more than it's worth, you're going to sell it. You're in a loss position. because that's sunken money. Nobody else is prepared to buy what you bought it for. So the market value, what is a willing buyer willing to pay? If it's less than what you've paid for it, you have a doubt unless you know you're like Jethro and you know the hillbillies and oil is under there. You're waiting for the oil like the people in Jamaica trying to mine off the coast. You're good to go. But if you don't know anything that we don't know, and you're just in the same mindset as we are, you know, you have no body brother you want to hide from Mr. Bailey, Fitzbailey, then you know you need to buy it at the right value. So our valuation report is critical for investment purposes.
Yes, indeed. All right. Question from Carrie. And I'm going to put it up because a couple of people asked about life insurance, because I don't think a lot of people realize when you said earlier, Stuart, that you need life insurance in place when you're taking out a mortgage. People don't realize that that was a thing, because somebody's like, what's the benefit of life insurance? Like, well, it's like a must have. So I think you just need to break down why that is crucial and why.
So a lender is concerned that when you lend your money for 30 years, nobody here knows when they're going to die. Yeah. So you could be here and hearty and you drop down dead tomorrow. What the lender is hedging against is that risk. And they say you must have life insurance to be able to protect their investment. And so what's important is you have to take, and they'll want to take out life insurance. What you want as a lender is prepared. If you have been taking out insurance, and particularly when you're older than others, if you're over 30, the older you are, is the higher your life insurance premiums are going to be. So what I say to people all the time is, if you've been taking out insurance from you're young and it's good term, and the value of insurance can be converted, so it's not a term policy or a policy that's been converted. I'm using technical terms. Let's use simpler terms. If you have life insurance that is qualifies to cover for the loan, pretty much you have to take out insurance for the amount which you're borrowing, not the value of the property, the amount which you're borrowing. And that now can sometimes be a sign from existing policies. And I tell people all the time, never put insurance in the name of your estate, because then you have to die before the money can be paid out. And if what you're borrowing $30 million, it's better for you to have 3 policies of 10 or 2 of 15 than 1 of 30. Why? Because you're going to pay these premiums on this insurance for the life of this loan until you die, right? But if you borrowed $30 million, you won't owe $30 million for the entire life of this loan. When you pay off the first 15, you take it back and you assign it to Susie, your long lost daughter, somebody else. But you're still paying less than if you take out a brand new policy. If you take out the policy straight for X lender, it stays with them. And even when you don't pay off all the money, you know, if you died owing only $2 million, when they cash in the policy, they take in the whole 30 for themselves. Then not call your wife or your friend. Nope, their money, because they are the beneficiary. So assigning old policies is great. And they'll tell you, don't do it that way because it's more expensive for you than just taking out one policy. Do it that way because the cheaper premiums, you'll never be able to get a premium at the rate you got it when you were younger compared to when you're older. So if it takes you 15 years to pay down on this loan significantly, when you have to take out insurance again, the premiums are that much higher. So even older people, think about it. Am I going to be able to assign existing policies? Because taking out a new policy is like getting another heart attack. Stress you out. So you have to be able to consider those issues, because that's part of the security of the loan. And remember, new policies mean greater cost.
All right. There's a question here from Eniosa.
Mind your cost, bad one.
You understand? I'm trying to pronounce some of these handle guys, and I know that not all the handles are people's names, but they could be, because hey, an unusual name is a great thing to have. It's great for personal branding. But this question, while it's personal, and obviously we're not going to get into people's personal business, and we would invite people to make sure to speak to their financial advisor and attorney about particular situations. But why I'm highlighting this question, Stuart, is because in the last stream we did, you spoke about the difference between tenants in common and the other one.
Oh, when you're owning together, right? So
yes,
if it's in this day and age with the cost of properties, I got very good advice early in life from actually it was a valuer. He said to me that he made his first investment into real estate that he couldn't afford by himself, so he bought with some friends, and they bought, and then they sold, and they all got more money, and they started and they were able to buy something else after. If you have those kind of friends, great. and it's, show me your friends. So you have friends with goals and drive, but guess what? You got to buy that as tenant in common with those friends, because a tenancy in common is one where the interests are divisible and clear, and you can separate. So you could technically sell your interest to somebody else without knowledge of the other parties. Then you would need their consent. If you are going to buy as a joint tenancy, then really it's only the person who dies last who really gets the entire property. The other critical consideration is that when you buy as tenants in common, so tenants in common has divisible shares versus no divisible shares if you're joint tenants. And so for business relationships, you don't want the joint tenancy route. The joint tenancy route is attractive to people who are in partnership, husband and wife, maybe, because it's great for them because you're looking to pay less costs. But guess what? Suppose your marriage is blended. There's history. You come into the story with children, and you don't have. We have our own stories. Some of us start off with different kinds of baggage to declare. I've had situations where couples have come to me and said, we prefer tenancy in common because I want to give my child a benefit, and wifey wants to give her child an interest too, and that's okay. So I think that you need to look at it in those sorts of ways, but be very clear on what it is you need to do and what you want to achieve. If you're both coming to this thing, building together, it's very clear that you're all in this together and you start from zero, build together everything, you are whole and she a lift. Joint tenancy works nicely. But the truth is sometimes the attractiveness of duties, because their duties are now so low, it's not as much of a great deal. So I say to people, whenever you are in doubt, if your trust deficit exists and there is the need to separate because there are other interests, you definitely want to go the route of tenancy in common. For all my parents out there who put their picture them on titles, don't bother with it, because you're tied to the picture them. And I love my children dearly. My wife may think more than she sometimes, but me not put their name on nothing. Because when they get old and faced with me and they say that, no, I don't want to sell. I don't know if it's the right time, but I need to make some money to feed myself. I have a problem. So don't think, sometimes they love the notion of putting them on the things from early. Not so good, because they have a say. If you want to control and don't want to have a say, that's a problem for you. So be careful of who you add to your title and what they do, and be careful of who's you put on for certain purposes, because then they have control. And it's very hard. Sometimes people have used people's NHT points and they've been added to a title and they're joint tenants on the title. And you want to sell it, and they say, well, I want the value now. I want my share. You say, but you only let me $2 million. How can you want $30 million now? You think about it, did you? But remember, people change depending on the circumstances. So a question that's important about life insurance. Mm-hmm. The life insurance, different institutions is a bit of a stretch, but it can work as long as the lender is prepared to accept the policies and they're good policies, you're fine. So you can assign what you have to make it up, but that's going to be important. I'd really advocate you looking at that, because sometimes you can save a lot of money from cutting that sort of cost. You can also save money from bargaining for fees to be reduced. People have asked us an important question about, renting. I see one here, using your present house for collateral for someone.
They've owned a property with someone for 6 years, and they want to use the existing property that they own with the person for 6 years as collateral to buy another house for
themselves.
Only.
Well,
yeah.
You can't without the other person, because trust me, that is fraud. So if you own with that person, that joint tenant, then they have to go and take that risk with you. So that's also very important. You're gonna have a situation where when you're buying so it's great. That sometimes may be a better route, but guess what? I know my wife, for example, we're not calling it, but my wife, if I tell her we're going to mortgage the house that we have almost paid off to take some risk, that's not going to happen. It's pure long face and vex up in the house. I expect that there's a security that women have. Women probably need the security. For those men with less risk tolerance, you don't want to trouble the house you live in. So you want to take a risk on something else. So the thoughts are really, what can you get the best equity on? But remember, even though you can get equity in the house, the issue is repayment. So there are schemes in some institutions for what they call reverse mortgages, where they will give you the money over time to pay back. But so you basically live out the house, but you don't have anything left in it. They'll say, we'll give you X money for the value of your home over this period of time. You have to discuss that fully. That's not something you can do without consultation, but it does have risks.
Yeah.
It does have
All
risks.
right. There's a question here from Fitzy Adams and another Fitzy Fitzroy. It said we must answer. Somebody wanted to acquire property, but the owner is apparently dead. They wanted to acquire land and the owner is dead. How do you go
All
about
right.
something
So
like
the
that?
owner is dead, and that's where we have those challenges about properties, and that's important to check it out because the owner is dead. There's a process to have to get that property transferred. Did that owner die with a will or without a will? So typically, I say to my clients, if you find a house where there's dead left involved, if it's a dead left yard, don't put yourself in a position to pull the trigger of any obligations until they've gotten that estate administered. Meaning, and that's either whether if the deceased person had a will, has there been a grant of probate, have the executors been registered on the property to act in the deceased stead. So let's use a simpler word: personal representative. I stutter sometimes, guys. So the personal representative is appointed to act for the deceased person. When they have a will, that's called an executor. When they don't have a will, the admin general creates what we call of administration for an administrator of the estate of that person. The PR is empowered, either with a will or without, to be registered on the title to act with the power that the dead person would have had to transfer a property. Until that happens, that's the only person who can sell the property to you. If a beneficiary has land and says, it's mine, daddy did it for me. But for the last 30 years, they've been living there and they've taken no steps at probate. Make sure that the John Brown you see on the title is the John Brown who you are talking to, because it could be John Brown Jr. And it's only when you're coming to sell now, you want to see, it's mine still enough, but wait for so and so, and that is a headache. And you have put out your deposit and you're waiting for 5-6 years and can't go anywhere. So you want to know that property, because that may not be property for you if you don't have that tolerance or time. Mm-hmm. So you want to ensure that the property is in a position where the personal representative, I say it slowly, has been appointed and knows it on the title to be able to deal with the title to handle the affairs.
All right. Guys, so okay, now we are well past time.
Samantha Levy has a big question. When you acquire government land, it's not the same as other land. I mentioned 6-12 years for squatters, but if you take in government land, that is 60 years. Nobody with it. It's not going to work. You cannot take government land, and the government has the right to acquire any land in Jamaica. What we have is an interest in land. There's something called the compulsory acquisition of land, because land is what they call vested in the crown. I guess if we become a republic, they'll call it something else. But all land can be reclaimed. Good examples for those who may be aware: Constant Spring Road. There was some expansion maybe a few years ago where they widened it. The government reclaimed parts of that road, people's houses and their properties, and they had to sell it. There was a fight sometimes over the values, but they couldn't stop them.
No.
And if they want to build a highway, they can acquire your entire parcel of land. So squatters, the idea of land, yes. So what you'll find is that the government has reclaimed areas downtown. Sometimes they just bulldoze people, and you hear big noise, in some parts of St. Catherine and Kingston. It's because the threshold for acquiring government land is much higher, 60 years.
Wow. Okay. So, guys, couple of things. So, first of all, Kimberly acknowledging. So, first of all, guys, just to remind everybody, this is not the first time we're doing a session like this. And if you want this information and more, you literally can go through our JMMB Group Jamaica YouTube channel. If you go on our YouTube channel in playlists, you'll see our Goal Getter Lives. And there are 2 sessions that Stuart did with us. And he may look a little different, and I look a little bit different on that video, but it was still the 2 of us. And we went on for almost 2 hours for one of them and about an hour and a half for the second one, where he went through 10 things they don't tell you when acquiring a property. And then the second one was about protecting your assets, where we went into divorce and marriage and real estate. You guys can watch those 2 videos, take out your popcorn, your notebook and everything, and bring your people them and watch it to your heart's content. Yes,
Tracy
sir.
Fletcher has a good question. 9:30
All
p.m.
right.
Tracy's question about trust.
Probating properties are expensive. Yes.
I love the last part, Tracy. If I missed the first part, don't shoot me. Another big point. People are getting excited about trust, and particularly if you live in the US, you hear about trust a lot, putting your property in a trust. That don't work in Jamaica. Not the same. And particularly because the way that we work now, and particularly how our laws have been changed, there's really no anonymity. So the tax havens you had with creating trust to hold properties and trust deeds and these things don't work in Jamaica. And the lawyers who tell that they can create trust for you. People like, well-to-do multi-billionaires, I won't call any names for fear of problems, but they create trust, but those trusts are outside of Jamaica. And usually they manage properties that are outside of Jamaica primarily. People hold properties in companies, but the idea of a trust is not a great one that's going to make practical sense in Jamaica generally for you in terms of managing assets. And so for those men who have extra children outside and people don't know about them, just buy something separate for them mother and put them on it. Nobody try to tie up a trust and give it to people later. It's a problem. It's going to be a problem. You leave a will, then make sure the property must be sold and the property and the proceeds shared up. So if you're gonna, like I said, having outside women is expensive. So make sure you can afford it, or you're a bad man, you don't business. Pay the spit on the grave. However, if you want to enjoy it and do a fight over the left, the idea is the trust not so hot. Right? Doesn't make so much sense, Karen. You asked me to come. That's how I am. But I'm saying things that people don't always say, but they think can happen.
Yes, indeed. Yes,
So
sir.
what we have to remember is the idea of trust don't really work in Jamaica so well. And either have a good will, make your terms clear. If there's a child you don't want to give anything because the child is worthless or wicked, then you say why. Because in Jamaica, there is the provision that a child who is a dependent or anybody who's a dependent can challenge your will, but you make an express term as to why I'm not giving them something. They stole from me in the past. I refuse to give them. They are worthless. You say that, and it is a basis because your intentions have to be followed. Probates are actually not as expensive as they once were, but again, everything in life, if you have planned properly, that's just a cost of it. I believe that if your children are going to realize the benefit of a property, there are very few. If you have more than one child, the chance of those children enjoying a property together is slim. Property has been sold. Let it be sold. Let the probate pay for it. A good lawyer is able to have those duties attached and deferred once the property is sold. It can happen. So don't think that you can become, many of us are going to end up house poor. We have house, we would have no cash. So when you die, if you're leaving one of this asset, don't think that asset must stay in the family for generational wealth. That's the wealth that they can then use to build on something else. If you're done that, children are going to have to use it as a seed money to plant, but don't get attached. Remember, you love the house. You have great memories of every room and what you mark on the wall. Then no business again. Let it be used for what it can be used, which is a start for your children.
Yes, indeed.
So, but the idea is leaving assets. That's their problem, not yours.
Two quick questions from folks over at IG, Stuart. So when the realtor tells us to make an offer and it's accepted, but yet you don't do a valuation, what happens after that? Because you were mentioning the importance of getting a valuation done.
Well, I always say subject to valuation. That's my preference.
Okay,
but
when you
the
make the
fact
offer.
is, if it is that you've made an offer for and that's accepted, but your valuation comes out to be less, usually why you're accepted is two reasons. You've given a price that they like, but the seller fee sees that you can actually pay it, because there are many who make offers, and do have dollar. They're living in faith. So if you come up with a valuation that says, hey, this is not worth it, can't afford it, it can't work, then the seller has to rethink their position. But get the valuation done early. Don't wait until you're down the wicket in the sale and you get quite commitment letter done. Well, you actually wouldn't get one until you get a valuation. But do it early, because there are people who will be reasonable and some will be unreasonable. And depending on how that agreement is written, you don't want to lose any money. And certainly money you always lose is your signing costs on the agreement, your attorney's fees. Lawyers want their money. Go work hard and go through enough stress. So you could be losing $20,000 right off the bat. So make sure the first thing I said to do is do the valuation, then you do the survey, because the valuation is critical. Now, recognize that some institutions want to do the valuations in-house. They don't want you to do them. So that may not be the valuer for you. That may not be the lender for you. But a valuation is now, some things I tell you guys are no brainers though. Corporate area pricing, you're pretty much good to go. You have an idea, you know the range, you see what's happening, you see similar things being sold, you have a sense of what the value would be. You're hard pressed now when it's those areas that are further away or unique types of properties. You know, the quaint ones, the ones that have historical value or sentiment. Valuations are going to be important. So I say your survey and your evaluation are critical, but get those done before you sign.
Okay. Another question here, Stuart, from one of our IG folks, the last one. I don't know if this is a correct word. She says, if there is a caveat on a property, or is it covenant,
Yes.
Jimmy? How
Caveat.
likely, caveat, sorry. If there's a caveat on a property, how likely is it for them to release the property? What is a caveat?
All right.
Please?
So there are two things. So you have covenants and caveats. Covenants are the things that tell you what you should not do or can do with the land. Okay? They're the rules. They're binding on owners. Every property covenants are shared on your property and that are part of the same plan or structure. When you have, we have to answer Ian Scarlett's question, Karen. Very important question I see here from Ian Scarlett. What we have now in terms of caveats, a caveat now is a warning on a property by someone who has established or claimed an interest in the property. That may be that they claim it by virtue of sometimes, now some are easier than others. Some caveats are from lenders. Some caveats may be from a previous purchaser. So if you've used your property as security, a caveat may be lodged on the property. If your caveat is sometimes lodged by JPS because they wanted to have rights of way to run their polls, those are easy. But the caveats for removal that are easier are the ones where it's a matter of payment of money. So a claim of interest in the land is there. So for example, this person may have owed money and they got an order for sale. They lodge a caveat. So once the property is being paid, is being purchased, or a lender had a loan, and then they lodge a caveat. The harder ones now are caveats in what I call cascas, where Sean says that he has an interest in the property because this property was owned by my granny, and granny did sell it to Johnny, and me, the poor cousin, never get my piece, but when they get staying, I like a one room and I get a bill of piece on the land. These things happen, guys. Again, truth stranger than fiction. And he lodges a caveat for interest in the property. Wow, you kind of dark now because he has a right. And if he can claim these interests that are adverse to the owner, aka squatter right, thief piece, have a value in it, then there is the need for negotiation or for the caveat to be challenged. So what you do is that's why searches for caveats are important. And not every caveat is noted when you look at the title automatically. You may see a number. So you have to look and see what the caveat is. The good thing is all caveats are at the land office, but every caveat can be warned. And if it's not, it can also lapse because once it's warned, so once it's triggered by a transfer lodged at the title's office or a change on the title, the person who lodges the caveat, called the caveator, has a certain time frame to respond. They have to go to court to get an injunction to stop the transaction from happening. So I've beaten the clock with some of them where the time passed and the caveat lapse. Like a loser, sorry. However, there are times where the interest is clear and you have to go into an agreement now to say, well, all right, this person will be paid out to the proceeds. But that's just how they enforce their rights. You're muted, Karen.
Ian Scarlett has a question. Hi, Sir Ian. If I have an investment property that is being rented, because you mentioned something earlier about reasons to get a tenant out of a property, what's a secure way to be able to evict a non-paying tenant? Love it.
And as much as I'd love to give them an answer that I can, that's fit for airplay, there is no real secure way.
Yes, sir. I would like to keep the job and work tomorrow morning.
No, I'm saying there are, short of badmanism, because there are people who become afraid of badmanism, people who come with tractor and just knock down gates. I have seen that happen, where they say, court, I don't need court. Bring a bulldozer and say, I come for the fence now and I'm taking down the front door later. And the people are out within hours. In reality, you have to go under the Rent Restriction Act. And the Rent Restriction Act is very much pro-tenant. So what I'd say is the non-paying tenant, under law, anything over 30 days, you can give a notice to quit and serve it. The problem is that notice has no effect if they, by the time they get to court, they pay up the money.
Pay up all the money or a portion of the money?
All the money.
Okay.
So what I do is I would just take off the roof. The house is not fit for habitation, and it needs to be refurbished or restored, and therefore they have to come out. Because what the law balances is, I was out of shot a while ago because I was perched. You have been here so long, little water you give me, wicked. What I found is important is that the law says, is the balance of convenience greater in granting the order for recovery than refusing it? So is it, they look at the interest of this tenant and how likely will they find somewhere else versus your commercial greed. But if the property is not fit for living, take off the roof. That sounds very unconventional, guys, I know. But the point is, be careful when you're buying a property. Recognize that if the property says subject to existing tenancies, you are saddled with that responsibility. So I'm kind of segueing from Ian's question of non-paying tenant. The secure way really is just the court and aggression. A good lawyer is going to be fast and be able to do this matter and realize whether it's faster to happen in the commercial courts, in the Supreme Court of Jamaica versus a parish court. But the recovery time, I tell people, is at least 3 to 6 months.
Okay.
That's your reality. But a property, because of our the act is to be amended, but until such time, since 1980, it's been in force. It's very much a socialist type position, balancing the interests of the tenant who is seen to be in a lesser bargaining position. So there's the only properties that are exempt are usually some commercial properties that have a certificate of exemption. And for that, you don't need to have a court order for recovery of possession. You can just come in. But once a tenancy has expired, so I'd say to you, then if the clearest ways are, if the lease has ended, there's a breach of the lease, then that tenant now becomes what they call he then only relying on the pause under the act. And they have less time. So non-paying, actually not paying is the least efficacious route or the least strong route, because they can always pay up the money at court and the reason is gone. So you have to have other reasons. So I'd say to you, short of needing to reconstruct the property, needing it for your own purposes, but don't tell me you want to sell it, because that's not a reason.
No.
It was one of the more popular reasons.
Got you. Jody Manny Morgan. What if a grandparent was suffering from Alzheimer's and in his final will he did not leave his land to any of his children? How can a grandchild claim the land none of the children want it?
Well, this question can be interpreted. What I hear is that grandpa or grandma head sick and had a will but didn't mention the property.
Or they didn't leave the property to the children. It would.
They left it to that sexy body man or woman down the road who gave them comfort.
That is not clear.
If it was given to somebody else, sorry, you will say that. Then you have to challenge the validity of the will. That at the time, the auntie, like the case you look at if you're watching the news about the sad claim about the former owner of Burrito, was she in her right mind when she entered into the sale? Was she competent to enter this will? So the issue of mental capacity has to be proven. Very hard to prove.
If the person is dead.
Right, particularly if they're dead, and there's no record of it, and few of us really are diagnosed or under a particular care. You'd have to challenge the will's validity, which is a very difficult thing to establish. And so if it's left, the other interpretation of the question is that if it was not mentioned and there was a will, then the will would have what they call a residuary clause. If a gift exists and a child under will should claim it, some beneficiary name doesn't want it, then with the consent of beneficiaries, the property can be sold to somebody else so the children could buy it from the estate. Because if there is a will, there must be an executor. If it's not required and the people want cash, then you can step in line to buy. And sometimes that has happened, where they come together and pay for an asset because the other members would like it and they want to keep it in family.
Final question. I recently found out from Kimberly. My family property I grew up in is not registered. We want the title, but we were told the land would have to be registered. How do we go about registering the property?
Okay, so if you want a title, the land has to be registered, but you can register on the land is now unregistered land, which does exist in Jamaica. But depending on your property is, Kimberly, you want to go to the land agency and ask whether there is a program that's existing where they're actually are there are quicker ways to get properties registered. And there is a site, Karen, it add this to your list, but I know I'm having brain fog at 9:48. But there are ways to have land registered that are cheaper, where the land agency actually is creating facilities for titles, where they're creating there's a land program that has been extended now, where they're looking at registering land in easier ways, where they're just like how for the unbanked, we're having simpler ways to get things done. They're making the process simpler, so you can, between the National Land Agency and a private entity. But that's a good place to start, seeing whether there's a program in your particular parish that facilitates you being able to get title done in a quicker fashion. The other way is you can go to a lawyer, and you can look at getting the property registered. It's going to involve getting a survey done, getting proof of your title as the common law title, because whereas a title tells a story and shows you who the owners are, you have to establish what they call root of title. There we go, geoland. Thank you, Kimberly.
Thanks, Kimberly.
Geoland is what I was trying to say. The geoland and LAMP, those are the two entities that can help you. And what you have to do is you have to establish what they call root of title. So proof of 30 years of ownership for your family, at least one owner. And that's a series of documents. So that's going to be very, very important. So lawyers can help you on those two entities. I tell you, actually, if you go to geoland or LAMP, you may spend less money than going to a lawyer.
Great.
Not every lawyer can do this, because it's like one of those niche areas that's more technical than others. So that's going to be important. Short-term contracts, Fitzroy, not really a big difference, because you're still covered under the Act. So sorry, there's no shortcut.
Yeah. Guys, make I tell you something. This has, of course, been a great session. So again, I'm going to ask my team to put back up the link. Please complete the survey. Give us your feedback. Complete the survey. If you complete the survey, you do stand a chance to win a few Amazon gift certs that we have to give away. And of course, you get the opportunity thereafter to download the ebook as a free resource to summarize the main points that we would have covered in this session. Right. Also, again, guys, we've done a couple of sessions with Stuart before. So if you want to dig into this, well, first of all, this session is recorded. So once we finish here, you can stay on our YouTube channel. Guys, if you're not subscribed to JMMB Group Jamaica, hit the subscribe button, hit the notification bell so that you will be alerted whenever we go live. And of course, like the video so that we can continue to share this kind of content. It really helps the channel out in terms of its visibility. But go into our channel's playlist, and in the playlist, you'll see a playlist called JMMB Goal Getter Live or Goal Getter. If you go in there and scroll, you'll see tons of videos, but you'll see Stuart's picture, because we've done 2 sessions like with him with this before, with just
They're so cute though, guys. I don't know why them pause me so awful.
What do you mean?
The old picture them look like me because my body come down. But
anyway. No, me wouldn't marry you if you did have body come down.
The picture, not me, the picture.
Well, no, you take the picture, so you look
good. No, them freeze me. The shot look wrong.
You look good. You look good.
Never like it.
Okay, well, I like it. So I'm just saying, guys, you will recognize Stuart in the picture then. Whatever your opinion of the picture, he is recognizable. So you can pick out those 2 videos, because he did one about 10 things I don't tell you when buying a property. We covered more than 10 things. And we did one about the law and you just protecting your assets. And we went into things like deadlift and divorce and marriage and all these wonderful things. So check those out, guys. Check out your notebook. Lots of information. And of course, I have to thank Stuart very, very much. I have to now give him 2 glasses of water because now I'm vexed.
No, I said, because
and we tell him go get water before the live, we say make sure get water.
You 1 hour. 1 hour, you tell me 2 hours.
Well, that's true. That's true. And the children gone to bed. They're saying, Hannah, to get a water for you. But sorry, but hush, I soon get you some water. But thank you so much, Stuart, for your time, your expertise, your entertainment. Hopefully tomorrow I'll have a job. So if anybody see me out a road begging, is what happened. I'd have to send off my resume. I'm kidding. Yeah, the opinions expressed by Stuart are not of JMMB.
Can you put the links in the chat for the people, because they can't click on the screen?
Okay, the links for who? Like the NLA and the GLAN and so?
No man, like the survey I think is early in the chat, but
Yeah,
somebody just
the
asked.
survey is going to be in the description box. All right. So once we finish here, guys, the recording on YouTube, we will put the link in the description box. So you will be able to click complete the survey, which will give you a chance to win. And also, once you do the survey, you'll also get the ebook to download. So please do that for us, guys, because we need your feedback. And again, subscribe to the JMMB Group Jamaica YouTube channel, hit the notification bell, and of course, like this video. But guys, we thank you so much for sticking with us. We went way over time. Yes, sir. Finger up again.
I know you're thanking people, but can I just leave them with something? This could be this information could appear to be very daunting for many listeners. I say, boy, my mind not thought up, so What I tell you is this: start investing in real estate. Don't buy what you want to settle with. Ultimately, buy something. But just like how you build credit by having debt, buy and sell later, but acquire something, because I guarantee you over time it's going to be better for you to gain either the experience of the process together with the asset itself gives you leverage to go forward to do something else. So it may not be what you want to live in, but it's what you have to then own and you can leverage otherwise. And having an asset, ownership of an asset, help with your visa, it helps with your credit rating, it helps with your discipline and management of things. It's something that allows you to get a start. So the dream house, maybe just like how the dream car is not the first one you buy for most of us, if we are smart, the dream home is not the first acquisition. But sometimes you can buy, and once you're buying at a price point where you can repay and you've built equity, then when you sell, you're that much better off being able to buy something else and leverage it. And so if you have a deal that allows you to start, you don't have to be in love with the first asset, but you can start and you can think about doing it with somebody else. Like-minded people, it's a business investment. Not a long time thing. So we're doing this for 5 or 6 years. Put in and we move out after that. That's the plan. You can buy me out, I can buy you out, but we can sell it and flip and move again. And that you'll find yourselves, just like how you draw a partner. Sometimes you can look at property like that, building to get somewhere else. So don't watch nobody else. Some people just tell plenty lie. Don't watch them. You learn your race. It's a one race at a time. You do your thing and you start to have a goal. And no shame either. If you can afford Portmore, you can afford Ola, but you buy it. What for you? And when you have it, you take your time and you build after that. And it's better to have something on rent, because the rental costs are looking very similar to these ownership costs. And the truth is, cost of ownership is going to become lower sometimes, but the cost of rental is always going to remain higher. So it's something for you to consider. No, people tell plenty like Karen, trust me, plenty story. No flaws and posing out the road, Things them have is not fit them on the bank own, but then look pretty. And then change out phone, new iPhone and them flaw. They don't have no money. They must have story. Credit, living on credit.
Okay. Yes, hopefully I have a job tomorrow. So guys, just kidding. But
guys,
and
yes, my clients, when they want to buy properties, it's important. And I ask the rough questions that they're ashamed to ask. And I flush toilet, and I sit on toilet seats and see if they feel okay. And I lick up on the door jam and see if it's creaky. I do all those sorts of things. And I call it, I know what are useful.
So Stuart is an attorney at law. He's a partner at the law firm Hart, H-A-R-T, Muirhead, Fata, right? And of course, guys, Stuart is an attorney. So there are questions that you would have that you'd want to share with or ask of a realtor, which is another conversation, a good realtor, your realtor, and of course your banker, your mortgagee. You know what I mean? Who, because
not throwing shit on Portmore, but saying Portmore has problems and people like to throw shit on Portmore, but it's a great start.
No, absolutely no. I mean, what
no, guys? Me, I disrespect Portmore. No,
we are not.
Far from.
No.
I'm just saying though that Portmore has lots of breaches in some areas. There are some very nice in not in breach, but there are some areas where, because they've been built and because Jamaicans ask for forgiveness and not permission, the absence of approvals, or people have taken up what was designed to be a duplex and made a mansion, we have a problem. And sometimes that mansion is overpriced beyond the scope of the rest of the neighborhood. So it's a bad investment. But no, not knocking Portmore at all.
No, not at all. Not at all. We have family over there too. No big deal. It's just about being wise when you're making purchasing decisions and recognizing the risks of based on what it is that you want. But guys, yes. So And again, JMMB, yes, we do mortgages. Somebody asked if we do life insurance. We do have an insurance brokerage as well. So we offer all kinds of insurance. So feel free to DM us if you'd like somebody to contact you to have that conversation. And of course, there are a number of licensed realtors around, legit realtors who I'm sure always are willing to serve and represent your interests as well. So guys, thanks again. Go back and again, there are videos with Stuart in our Goal Getter Live playlist on our YouTube channel. Like this video, subscribe, hit the notification bell. We will be back tomorrow for Elevate 6.0. We're coming back tomorrow, 8 p.m. Same time. We're going to try to keep it in the hour tomorrow, though. Trust me. Because we just had a lively Q&A tonight, more than any other night so far. So we and Stuart have to live here, and so do I. But you know, he has to live here, so I begged him his indulgence. But tomorrow, now we're going to be talking about investing, and yes, guys, it's a tough climate, and people want to know how can I invest to maximize my return. So we're going to be talking about that tomorrow, 8 p.m. Keisha Bailey, Profit Jumpstarter. A lot of you may know her as a wealth management, wealth advisor guru, as well as our very own Peter Thompson, who is our lead investment manager. So they're going to be here talking about investing. You don't want to miss that session. Again, all the platforms, YouTube, Facebook, Instagram, and X, need Twitter. And then we'll be back on Saturday now. We're taking a break Friday for happy hour, but Saturday morning at 10, we're going to be talking about how to change your side hustle into a business. So for all of us who have side hustle and really want to turn up the thing and turn it into a proper business, we're going to be covering that at 10 a.m. on Saturday. But come check us out tomorrow, guys. We'll be here same way. Thank you again, Stu. Thank you to my marketing team, especially Jess, who has been working the cameras in the background over time. Poor thing, probably won't go to our bed. So sorry.
It's your fault.
No. Yeah, it's kind of, I take responsibility. I take responsibility and accountability, but you look like you was enjoying yourself too. So don't worry.
No, I'm a creature of instructions. I see the questions and the people want the answer.
And you willingly oblige. So
Miss Susan JMMB the bill. Don't worry, me go send the bill this time because this freeness thing can't work for 2024. Me have to make a side hustle. I don't have no side hustle, so I make a money off it. I sell time. Don't you guys? Tell them if they should pay me. Do a poll for that one there for me now. Should I be paid? I'm just
try to keep the work, guys. Help me. Yes, guys. So we will say again, thank you, Stuart, for your time and attention. Yes, guys, we've recorded this session, so it will be available on YouTube right after. DM us if you need to have a conversation for on the financial side for mortgage and insurance conversations. And we'll see you here, same time, 8 p.m. tomorrow. All the best. Stay safe. Thank you very much. Cheers. Goodbye.